Hey there traders, welcome back for episode 17 from thestockbandit.tv. It's the place where you find trading videos to make you better. I'm glad you joined me for this episode, and I definitely hope that your weekend has been a nice one. Well, it's that time again. It's time to take a look at the major averages and see what's going on in the big picture, and we'll see how it applies to us for individual stock trading in the next few days. So let's get over some key levels for starters in the major averages. We're going to start off with a look at the Nasdaq, which has climbed right back up to the upper end of its trading range. We've been in this channel here. We've just been generally moving sideways here for quite some time now, and now we're up here challenging the upper end of this channel. If we can bust through that 1600, 1603 area, then we're free to move back up here to that January high, which is at 1665. So that's good to see for this index. It is encouraging, but we're going to need to see more than just a move to the upper end of this channel. Moving on to the S&P 500, we have climbed back up to the previous bounce highs, which are the 877 level. That's where this yellow horizontal line is. And by the way, I hope you're watching this in full screen. You can click that in the player and you'll get better clarity on your picture. But we are just a few points shy of that previous bounce high right there at the 877 level. So if this index can punch through that level, then it's free to climb back up here to the upper end of its trading range, the bigger picture trading range, which is at the 915 area. And we have seen some encouraging volume with that in the past couple of days as this index climbed up off of short-term support and is trying to reach higher. So we'll see if we can make that happen in the next few days. And then on the Dow Jones Industrials, here again climbing up off the recent low with a good solid couple of days of advancing. We saw a good strong volume accompany that. If we can get up over this 8405 level, that would clear this high right here and get over this yellow horizontal trend line. And of course, then this index would be able to climb back up toward the upper end of its big picture channel that we've been bound by for so much of the past few months, and that upper end is at the 8900 area, kind of right between 8900 and 9000. So this index definitely has some room to get going on the upside, but we're going to have to see more than just a couple of good solid days. So what we have right now is the potential for many individual stocks to start catching a bid and begin moving higher, but it is important to remember a few things right now. First, follow through has been very difficult to find lately. So I'm going to just number this. Number one, follow through. And really, that's going to need to change if this time is going to prove to be any different than any of these other little bounces that we've seen in recent months, which quickly got erased with selling. And so the upside from last week, this move right here, that needs to inspire more buying rather than invite sellers into the picture, because we are distinctly not in an uptrend right now. We're moving sideways, although that does become a possibility for change from an area like this if we do see some follow through and some upside progress starting to take root. Number two, the next thing we need to remember is that many stocks are in sort of a double bottom type pattern right now. And so I'm just kind of drawing this miniature double bottom here. And that means that we've got a lot of important support levels to be keeping an eye on in individual names and in the indices. Obviously, we've looked at the indices, but many individual stocks resemble this as well. And so we're going to have to keep a close eye on those support levels in case some downside does happen to kick in. Momentum has not yet gathered, but that's actually an exciting thing, because it means that if we are going to see a good, strong rally from this area, then it's all still ahead of us. And so we need to be spending some time sort of separating the stocks which have some promise to them from those which may simply prove to be also rans. And that kind of thing is what is covered in the premium videos. But what's important here is that we stay on watch for characteristics of lasting strength. So definitely be on your toes for that. And finally, this week we have news coming out. Early in the week, we have this big stimulus news coming out of Washington. And so really, it's likely to be an event-driven week, and we're likely to see some responses to that news, which certainly are not going to be predictable. I think it's important to note right now that what's important is how traders react to the news. It's not so much what the news is. So it's important to remember that right now, because what you want to do is always respect the price action as always, and just remember that anything is possible, and that includes a sell the news reaction. Even if it looks like great news, if we rally big ahead of it, then that news is likely to get sold. All right, so thanks for joining me and for subscribing to the videos as always. I will be back soon with another video, but while you wait, trade like a bandit.